am I excited for this one? Even though the AMC price is down on the day, that is irrelevant. As long as we know why AMC is down on the day, that will establish our conviction. So let's talk about that real quick, and don't worry, we most certainly will be talking about the ex-Citadel worker who has basically admitted to the mother of all short squeezes, and yes, the magical $166 million. What is that all about? Let's first get into understanding why AMC was down on the day and how this all relates back to the general market. I know for the subscribers at this point, you guys are probably already understanding what I'm about to say, just because you guys are the ones that are prepared. So many of you guys, and I'm so happy that you guys are starting to understand how AMC is actually going to be traded, because as Tesla continues to go up, that is not the case for AMC and vice versa. But I'm just saying that on a day like today, AMC was down, meanwhile Tesla was up. And this also did not happen just for one day. This was actually happening for multiple days. This happened also yesterday. The candle wick of Tesla was up, whereas AMC was down. Just 2 days ago, AMC was actually the stock in favor, because AMC, while it was going up and while it was very resilient all the way up to this point right here, almost to $53 a share, Tesla went down drastically. So I say this not to try to compare any equities to each other, but simply to understand some relationships so we could trade AMC better. And so that for our long-term investors, which I also am included, I'm a long-term investor because I simply just believe that there is so much opportunity in this stock regardless if it is up or down on the day. But establishing these connections will help us understand why AMC is up on the day as well as down on the day. And here's where we get to the exciting news, because we have good news for AMC. And this all relates back to Disney. Now, Disney is a competitor to some extent for AMC. This is the argument that many have. And so Disney is going to be releasing, though, the rest of their 2021 films exclusively in person or in the theaters. Why is this good news for AMC? Well, here are the key points. Disney says that it has 6 film releases remaining or left to be for the year of 2021, and AMC theaters could use this momentum and this news to provide some offset over what's going on economically right now and with the company's balance sheet, like how they are still in debt and how they are still not at profitability. And the AMC shareholders have reason to be excited, as it could have turned out much, much worse. I agree with this as well. We have another positive catalyst, and this is where we get into the $166 million. Let's get into that right now. So AMC Entertainment Group was devastated because of what was happening to the economy when it had to shut its doors to moviegoers. Since nearly all of the company's revenues come from bringing people to its theaters to view films and buy buckets of popcorn and tumblers of soda, the stoppage was catastrophic. Film studios, including Walt Disney, had to make tough decisions regarding movies they planned on releasing, and the outcome of those deliberations was a varied release schedule, with some films being only on the theaters, whereas others were on platforms like Netflix or Roku, and the others were in theaters. And good news for AMC, and fortunately for AMC, Disney, for now, has extended its mixed release experiment with an announcement stating that the rest of its 2021 films will receive initial release exclusively in the theaters. Exclusively in the theaters, this is absolutely amazing. And here's why, because this says that coming to a theater near you, well, the news is music to AMC's ears. I agree, because the company is still struggling to bounce back from the balance sheet, and simultaneously releases on streaming services were not helpful to the cause. I agree with this as well. With more competitors like Netflix and Roku, even though AMC's volume is much higher than both these companies, meaning that the AMC movement is actually much, much stronger than the Netflix movement or the Roku movement. AMC does not have a better balance sheet. Both those were competitors to AMC, but with this new news surrounding Disney about how new Disney movies will be in the theaters, that right there is absolutely bullish news, because right over here we can understand that the box office receipts of 166 million worldwide by the end of its first week in the theaters. Essentially, all this relates back to the bullish news for AMC, and again, that is why this is a buy and hold for me, and I am still a part of this movement. I've yet to sell AMC because, as I just stated, there's just simply too much opportunity in this equity right now. Now here's a Citadel interview, and remember, this individual used to work for Citadel. I also don't want anyone to think that I'm being biased by only including various pieces of the interview, so for that reason, here's the entire interview, and make sure you pay attention to what he says about the retail traders and how he specifically says how much more powerful we have gotten. Yes, he does mention how much more powerful the retail traders have gotten within the stock market, so take a listen.
Is broken, and retail traders are getting a raw deal. Let's bring in Dave Lauer. He's a former high-frequency trader at Citadel. He is now CEO of Urban AI. Dave, great to have you with us.
Thank you so much, Melissa, for having me on. It's a real treat.
Why a raw deal? What about the deal is raw?
Well, I think there's a lot about our current market structure that's overly complex. And if you ask any regulator, they will tell you that this is not the market structure you would design if you were starting from scratch. And it's something that's been layered on year after year and decade after decade. And frankly, the point that we've gotten to is one in which a lot of incumbents have been able to structure it exactly how they want it to be structured because they're making a lot of money and they are able to wield a lot of political power. And I think we've really lost sight of the two primary purposes for markets, which is price discovery and capital formation. And price discovery is so critical, and that happens mainly on stock exchanges, on lit markets. So this issue that you just brought up with half of all trading taking place off of exchange and 70% or more in stocks like GameStop and AMC, I think is a real problem, and it's costing everyone.
They have to pay more under this current antiquated system that was built by incumbents, you say?
Yeah, that's right. And when you have the internalizers in a de facto duopoly, you have other issues around corporate concentration of power and antitrust. And Gary Gensler has said exactly that in his SEC testimony, or in his congressional testimony when he was becoming the SEC chair, and in his first testimony. You know, this is an issue that I think is going to get a lot of attention, and I think that concentration of information is also problematic, right? If 70% of GameStop is trading through Citadel and Virtu, and they're also making markets on exchange, and they're the designated market maker on the NYSE, for example, they have a huge information advantage. And that kind of information advantage means that they have a lot of power to set the price of that stock. Now, it doesn't mean that they're affirmatively manipulating it. I'm not saying that, but it does mean that they have a lot of power and they can swing it, in all sorts of ways to help improve their profitability or change the quote at which they're then internalizing.
Hey, David, it's Jeff Mills here. Quick question for you. You know, obviously the SEC regulation cycle is very long. We're shining a light here on some issues that impact retail traders. Is there anything that they can actually do today to better position themselves for the environment in which they're operating?
You're asking in terms of what should regulators be doing?
What retail traders can do right now? Like, are there any actionable insights that they can take away from this discussion other than the idea that, yes, they are disadvantaged, but is there anything they can do to better position themselves given the present circumstances?
I think so. And I think that they can take a good, long, hard look at their broker. And how does their broker handle their orders? Now, if you're a retail trader, it is very difficult to get away from a broker who is sending their orders to this duopoly of internalizers. However, when the retail broker sends their order to an internalizer, the internalizer has a certain amount of profit that they're going to make, and then they have a certain amount of money that they can rebate back to either the broker or the retail client. So if they send it back to the broker, that's payment for order flow. If they send it back to the client, that's price improvement. They get a better price on their execution. Some brokers take nearly all of it as payment for order flow. Other brokers don't take any payment for order flow. They just give it all back to their client as price improvement. So if you're a retail investor, you can say, well, I probably want to go with the broker who gives me everything in price improvement. That's going to add up over time. And it does get to another issue that I think regulators need to address, which is best execution.
Would you submit that the playing field in terms of where we were 10 years ago to where we are now in terms of the retail has never been narrower? My sense is the playing field has never been flatter than it is now, your comments notwithstanding.
Yeah, if you're going to compare to early days of Reg NMS or pre-NMS, there's no doubt that the electronification of markets has been an incredible trend for everybody, both the institutional asset managers holding money, holding the wealth of retail, as well as individual retail investors. I would never deny such a thing. But I think if you're looking to assign reasons for that, it's hard to say that off-exchange, the increase of off-exchange trading is helping, or it's hard to say that the practice of internalization is helping relative to something like decimalization, which dramatically brought down costs for people without all of this complexity that we've then introduced.
Last question, Dave, and that is, since you worked at Citadel and you have comments about what you call this duopoly running off-exchange trading of Virtu and Citadel, do you think that they use what they see in terms of order flow to their advantage?
That seems like a dangerous question to answer. And so I would never say, I would never accuse anybody specifically of manipulating markets or anything like that. But I think that having that kind of information is suboptimal for markets. Having that concentration of information is not where we want to be. I believe in open and free competition for order flow. And I believe if you send all of those retail orders to lit exchanges, you would compress spreads for everybody. And those retail orders would get just as good, if not better, execution because of competition, which is something that if you're in markets, you'd think you would support, just completely free and open competition.